Hey everyone, it's Evan here from the Trade Risk on Tuesday, February 13th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. This is our shortened midweek version. We're going to skip the sector analysis. We'll save that for the weekend, and we'll jump right in here with the market environment. The S&P 500, the SPY ETF. You can see we had a positive close here on Tuesday, up 71 cents on the day, up about 0.25%. Let's look at the weekly chart first, as we always do, try to get that big picture perspective before we start to drill down into those smaller time frames. When we look at this weekly chart here, you can see again it's only Tuesday. We're already up 4.5 points. That's good for almost 2% to the upside in the SPY, and you can see we are well off of the lows already from last Friday, where we came all the way down to about 253 or so here in the S&P 500. We saw a nice bounce, and here we are about 13 SPY points higher from the lows just 3 days ago, 2 trading days ago. So when we look at this perspective here, what we can see is, we have very clearly had this undercut of this major trend line that goes all the way back to the start of 2016. At the lows here, we also had the 200 period SMA, very highly watched influence of longer term trend that we tagged that moving average right here at the lows, and we're seeing that initial bounce higher. And so far the bulls are rallying us nicely. We're also trying to recoup this flat 20 period weekly moving average here. So when we look at this weekly chart, we have we're in the midst of this bounce higher here, trying to reclaim some of these moving averages. We very much, it's only Tuesday, but we very much have an inside week so far. And this would make total sense to probably see this occur even at the close here on Friday, just given how big the range was last week. It's probably a safe bet that we're going to see an inside week, which would start would start us on this path of really getting things more interested, and kind of leads us into this daily chart where things get a little bit more messy when we start to look at the daily chart here. And this is where strategy and time frame is going to be extremely important on how you navigate sort of a messy sort of technical picture like we currently see. So when we look here at the daily chart, once again, this long tail back here, this was Friday's reversal. We got follow through from that on Monday. We were up 1.5% yesterday. And again, you can see we just eked out a little bit more gains today. So as it stands right now, we're about 13 or so points off of these lows, and we're coming in to kind of a confluence of inflection points here. We really have the fast moving averages starting, which are now definitively bearishly aligned, declining and coming up against price. We're about to start bumping up against some of these declining moving averages. We also have the highs, or these, at least this lower high that we made on Tuesday and Wednesday of last week, where we found sellers starting to overwhelm again right around this up into this 270 level, which set us up for that second leg lower into the end of the week. So we're coming into some prior supply, some declining moving averages, and when we look at the volume today, things have lightened up. Volume was pretty light today. We did have an inside day here as well. So Monday, again, we covered a little more ground. Today, things were a bit more quiet on lighter volume. Inside day from yesterday. So it's going to be interesting to see, and this is what I think is going to be the important upside point to pay attention to, is in the S&P 500 rallying into this 268 to 270 zone, maybe all the way up to 272. It's going to be very interesting to see how the market deals with this zone in here of this prior swing lower high, and again some of these fast moving averages. You could probably see it a little more clearly if you went down to an intraday time frame here. You can see we're just kind of going sideways in this kind of like 2-3 point range here for most of today, and the resolve here I think will be an immediate interest tomorrow for you shorter term traders. Do we see that continuation higher to potentially get back up and retest maybe as high as, like, again 272, or do we start to roll over here in another sort of consecutive lower high fashion where the market starts to take a tumble? That's going to be interesting, especially for the short term traders there tomorrow. And of course, for us longer term participants too, it's going to start to impact, the next, basically the next few days of trading, depending on how this inside session resolves itself. One other sort of comment here that I'll make is, Today we started the session here. Let's go back to that intraday time frame. But we did start today with a gap lower to start off the day by about 0.5% or so in the SPY. And I think the save by the bulls today was fairly meaningful just in the short term, a real micro data point. But I think that the gap down today could have been really ugly if we did not see buyers kind of step in and support this price. Because if you're to think about it, we're in kind of a damaged overall market, and if we came in with this gap down and it just continued to sell off back towards the lows here, then the market, we would certainly be in a different spot right now at this close, and we would probably be in a lot more painful spot for longs. So the fact that we at least stabilized and actually managed to go green today, I think was a good micro win by the bulls. But again, on that longer term time frame, when I look at this technical picture here, the risk to reward isn't so favorable for getting aggressive, putting on new exposures right as we come in and retest some prior supply, a prior pivot, and some declining moving averages. For me, that's not a spot where I really want to be allocating heavy to. I'd rather just be sitting, watching, waiting to see how this battleground sort of develops. And then after some more confirmation proof, as some of these averages start to flatten themselves out, potentially turn around, then you start to get a little more aggressive. Could we V-shape from here? Could we just skyrocket? Is everybody worried that we might fail right here? Absolutely. It could happen. Just like a very fast and sharp move back to the lows could happen. So always keep your mind up, mind open. Volatility is still elevated. It did come down today, but still it can come back fast. Charts are still technically broken here over the short to intermediate term. And when I look at breadth today, sort of a final rambling thought, we're still not seeing a sudden surge uptick in new highs. We're still seeing fairly tepid response on this bounce. So again, I like the bounce. I mean, it's good that we stop the bleeding. We're not just capitulating everyone here on a further move lower. We are bouncing. We are trying to find some support, but I think up here is where we're really going to be tested for this market. And basically all the moving averages, all the major averages, we all have similar looks here. So I think that is it. I'm looking over my notes. I think that's all I had to say. Lighter volume, inside day, reward to risk, not so favorable, putting on a lot of exposure. Doesn't mean you can't have exposure, right? And again, everybody's strategy will be different, but I do have, for myself, have long exposure on, just not a whole lot of it, and I'm not interested in adding over today's close, or maybe not even tomorrow's close. If we're still just hanging out around here, I'll let the exposure I have continue to sort of keep me in with one foot in the door, participating, but not getting aggressive. I think I made that fairly clear. So let's look at some other markets here. IWM, the Russell 2000. I think this one is actually even more clear cut. We talked about 145 in our last video. It did get that nice bounce. We're starting to lift back up and again working our way back towards the pivot and some of these declining moving averages right around 150. I think the Russell 2000 is one of the clearest cut setups here. Basically, I wouldn't want to really get aggressive owning the Russell until it's back above this call it 151. There was a lot of supply right in here. It acted as resistance for multiple weeks back in late 2017. It acted as support again in late 2017, and we came kind of crashing down and breaking down below it. But just notice all the supply trading in this general area over the past couple of months. Until this market can reclaim that, until there's not enough sellers looking to get out at break even here on this rally higher, I think it's a fairly straightforward from a reward to risk basis not to really own it here until we're back above it. Again, that's sort of a personal preference style time frame thing as well, but to me, I really just need to see this prove itself another couple of points higher. For now, it looked like a more interesting short setup to me into these highs or into this 150 level. I mean, as does the S&P 500, frankly. Probably if you're an aggressive short, or if you're looking at this market as potentially just seeing a first leg down and there's another wave to come, then as we start to rally up here around these levels, or look for that roll rollover, I think a short, putting on short exposure there for a tactical trade, if that's your style and in your sort of wheelhouse, seems like it would make pretty good sense to me. NASDAQ 100, the Qs, the best looking of the bunch here. We are above all of this supply here. So here's the late 2017 supply in the Qs, and you can see on a relative basis we are above all of this supply. So that means that all of these people that were buying the Qs in here for the last 3 months or so of 2017 into 2018 are still positive. They either didn't wash out here, or maybe they just got washed out on this day on Friday, a couple of days ago, but they are all now back in positive territory. And for me, again, you're still coming into declining moving averages, and still the pivot high here, the lower high from last Wednesday, which is still, again, a concern, but on a relative basis, I like the Qs probably the most here. Also, again, pretty reasonably off and above this trend line that extends from the July 2016 level. So that's the market environment overall. I think, again, things are, your strategy here is going to be very important not to get twisted and turned up inside of what could turn into some prolonged chop here. So keep that in your mind. And on the downside, we didn't really talk about that, but as it starts to lose, if we start to lose effectively Monday's lows, even Tuesday's lows, as this inside day starts to resolve itself, if we start to roll over tomorrow or later this week, taking out the prior day's lows and particularly resolving an inside day lows to the downside would be a pretty momentum-driven classic sort of short signal if you're interested in putting on that type of exposure or trade. So that's the market environment as a whole. Let's take a look at some other markets here. You see TLT trying to rally. This thing's been beaten up quite a bit here over the past couple of weeks. It had this major breakdown below 123 or so. It is oversold. It is sort of ripe for a bounce here, but you can see it's below all these declining moving averages. So the momentum right now is very much in the seller's court. So you got to be tactical here. I'd imagine that if we took out this cluster of 3-day highs here, so basically right around 119.50 or so, that would pave the way for a mini little squeeze, maybe all the way back up to 121 or so. But you got to be tactical because you are fighting against the current here in TLT. For now, it looks like sellers are still in control. Next, if we go to USO, this continues trying to find some stabilization here today on this little mini reversal, which coincides with the lows from Friday, but still this one has kind of come off in some pretty quick order here. But it is a pullback, and it is the most meaningful pullback we've seen in oil in probably the past 6 or so months. So if you are, if you miss this rally, if you believe in oil on the intermediate longer term basis, which on a weekly chart still has higher highs and higher lows and is still above a rising 20 period weekly moving average, then this might be a pullback that you should be interested in. And the reversal today coinciding with the reversal from Friday maybe starts to get you interested. Otherwise, waiting for these moving averages to get back down here, turn around and start to move higher is always a safe bet as well. So something to consider there if you are, or if you have been waiting for a long entry in oil. Natural gas, this thing is really, just kind of falling apart here. As we started to pull back, I think down around this level, it's really looking to see if buyers could kind of hold in here, put in a higher low, and potentially start to lift back up towards these highs. That just has not been the case. We got really weak here into the end of last week, came all the way down to sub 22. We did bounce back today, 1.5%, but it's still a pretty damaged chart. It's a messy chart. It's a very loose chart right now. So there is opportunity here. Of course, if you're a shorter term trader, just looking at how wide and loose this chart is. But structurally, from a swing trading perspective, I'm not seeing a whole lot interested here. For me, there's been enough damage now that leads me to believe a retest of the December lows is not an unreasonable thing at this point, and something I'd probably just be waiting for to see if it happens. Otherwise, the bulls are going to have to prove a lot more to me above say 24 or something around that area to repair some of this damage over the past week or so. I think the metals actually, so GLD. So gold, I mean, I've been saying I like gold. I like gold. I still don't own any gold. I'm watching it though. I like the recovery today. I like that it's moving back above the 20 period and the 8 period. So some of these fast moving averages, still you can see they're pretty sideways right now, and the 8's still underneath the 20 period. So I'm paying attention to it. I'm not sure if if this pullback and this consolidation is over yet. I personally, myself, for my style, I'd like to see kind of one more test back down here, retest this level. Let's see if it holds, maybe even a quick undercut and then a launch higher. That would be sort of the ideal scenario for me to get involved. Right now, I'm still just paying attention to it. I do like the prospect, though, for a long trade in GLD, but I'm not willing to put it on right now. I don't see anything totally actionable from my sort of setup as it stands right now. And silver, this one just totally, this one very much has more to prove to me. A nice, again, a little turnaround this week so far, 1% yesterday, some more gains today, but below these declining moving averages. It lost this kind of sideways channel here from the beginning of the year. So until it gets back above, really $16, $15.90 or so, and then you're going to want to pay attention to this level up here around $16.30. I think this, getting back in here, reversing some of these moving averages, getting that momentum and that trend back working in this daily time frame is going to be important. That's what I'd be waiting for. So for now, much more interested in GLD than I am in silver. So that, I think, is everything. We're going to end it there. Hopefully you guys are off to a good start this week. It is only Tuesday. It's early, so you got plenty of days to make something happen this week. Thanks so much for watching. Again, if you like the videos, do subscribe to our YouTube channel. We put these out Tuesdays and Fridays, and then the occasional trade ideas and some education mixed up in between those market recaps. So thanks again, and talk to you guys later this week on Friday.